profit, which of course converts into the loss because of this 3,500 crores number. But I would fault the company for this particular thing, because we'll of course have to figure out what this is attributed to. But what's encouraging is that even in a quarter that was not very robust on a YOY basis, they managed to report very good, decent top line. And remember, we all know that it was tractors that was the saving grace here. PVs were not contributing to the company's growth for the last few quarters. And if tractors have contributed significantly, that's also resulted into this uptick in the margins that we are looking at. So all in all, I think the market will like these numbers once there's clarity on what's the 3,500 crores attributable to.
Prakash, let's bring in Sonia. Just stay on the line with us, please. I think Sonia will have more details on the specifics and what this loss is on account of. Sonia, afternoon.
Yes, thanks Prashant for that. Actually, these numbers are not bad. Of course, there's that one big loss that the company has incurred, but if you strip that off, the margins at 13.6% are much better than estimated. It compares to 13.5% same time last year. I'm just reading from the press release, and that actually means that they've held on to their margins even in this challenging environment, and their tractor segment market share has gone up by 1%. If I look at the fine print in the press release, it says tractor segment market share has gone up. I'm also looking at the EBIT performance. So if you look at farm equipment, quarter ended 31st, if you look at it year on year, farm equipment EBIT has actually gone up to 548 crores versus 518 crores same time last year. Of course, the automotive segment is a different picture altogether. There's been a huge fall over there, 225 crores EBIT versus 900 crores same time last year. There's a big fall in the automotive EBIT, but the tractor segment really is very encouraging. So the tractor segment EBIT has gone up, and even if you look at the revenues for the tractor segment, just farm equipment, 3,111 crores versus 3,200 crores same time last year. So there is a fall, but the fall is not as bad. Prashant, of course, this one-time loss, I'm just trying to get the fine print of that. But the operational performance is not bad. Tractor segment looks good. Market share in tractors have gone up. So doesn't look like, it looks like they've held on to their margins even in a tough time like this.
Sonia, thanks very much. That kind of puts things into perspective. Bharat Gianani of Sharekhan also is joining in. And Prakash Devan also, I think, is on the phone line with us. Bharat, you've been also looking at the numbers. What do you make of them?
Yes, so definitely, good afternoon to the viewers. Definitely, the numbers look better than what the street was expecting at the operating level. So if you adjust for the one-time loss, then obviously the number is better than what the street was expecting. And I think tractor segment has a bigger role to play in this. So the tractor volume decline, if you see in this quarter, was just 2 or 3% compared to the automotive volume decline of about 40% or so. So definitely the higher mix of the tractors has helped Mahindra to post better than expected numbers. Have
you been able to figure what is the one-time loss on account of, Bharat?
Just going through the release, but just have to figure out what the...
Okay. But net, you're saying these would be better than what you thought, what the market expected?
Yes, at the operating level, it is definitely better than what the street was expecting.
Okay. Anisha?
Oh, well, yes, Prashant, I just wanted to highlight some of the commentary that the management has put out in terms of outlook. They say that one can expect a quicker recovery in rural India, as is evidence from the tractor sales of the company in the month of May. So they are expecting that there will be quicker recovery in rural India, and that will be very positive for the company given the tractor sales. Separately, they say the urban segment may take longer to come back to normalcy, and they say as restrictions ease, the economy at large adapts to operating and living in a post-COVID era, it is expected that there will be a gradual recovery in the second half of the fiscal. So I am guessing, Prashant and Sonia, that this will be taken positively by the street as well, that the company is talking about some sort of recovery and uptick, especially in rural India, in the second half of the year as well.
Absolutely. So, that positive commentary will definitely be taken well by the street. Another thing I just wanted to point out is the kind of margin performance that you've seen only for tractors. And the tractor segment margins have come in at 17.6%. I just calculated them versus 16.1% same time last year. So, there is a year-on-year considerable jump in the tractor segment margins. The automotive margins are under a lot of pressure. As I said, the EBIT for automotives is down to 225 crores versus 900 crores. So I just want to get Prakash Diwan in on this. Prakash, the stock Mahindra & Mahindra is up 75% from the lows that it hit in March. Obviously, it's pricing in something. It perhaps is pricing in the improvement in the tractor segment demand because of a strong Rabi harvest. Now that rural demand has come back. You think a lot of the good news is in the price already, or based on this tractor segment performance, do you expect more upsides?
No, Sonia, so interestingly, the stock has been holding up and has, of course, moved up on the back of what, we saw. We started pricing in or penciling in from the tractor segment, and Escorts was a very clear indicator that even Escorts and VST tillers, even a marginal player like VST tiller, had a buoyancy which was very clearly reflected in numbers. So it was bound to happen. But, apart from this one-time loss, which could probably be because of a Sangyong, write-off or something, I don't know. We'll, of course, wait for the commentary. The headwinds, positive headwinds for Mahindra & Mahindra are from two fronts. One is this whole recovery in rural segment is beyond tractors, likely to be beyond tractors also. As I keep on pointing out, with so many migrant workers having gone back to the rural markets, the informal public transportation is something which Mahindra & Mahindra can very easily suffice. So it's their vehicles, their portfolio of passenger vehicles, which will actually be in demand with so much of people moving around these new markets. And the second thing is even the Ford JV, so of course, April, May, June is a washout. We've heard the commentary from the management on your channel saying nothing much has happened in terms of production. But going forward, I think even that Ford JV is something which has not yet started showing its true strength. So that could also kind of, start bringing in a lot of salience. So my sense is the stock will probably remain very strong or resilient at these levels. It could probably lose 5-7% here and there, but apart from that, there's only a build-up which will be positive from here. So for investors who have been locking in at lower levels, they should stay put, because I would believe it will do very well after the September quarter is done with, because the rural recovery will probably be very prominent for this name as compared to the other players that we compare it to on the automotive segment.
But wouldn't you be concerned about the way the auto segment margins are getting hit? I mean, it's a 75% drop in their EBIT. I agree that, large part of this quarter has gone off in the lockdown and they haven't made the volumes have fallen quite a bit. But unlike their peers, they are just unable to hold on to margins in the auto segment. Yes. Wouldn't that be a worry for you? And don't you think that could be a cause of underperformance?
No, so that has been the reason why the stock reacted so negatively even in March. Because remember, on a YoY basis, you're right, they've had no new launches in the last 2 quarters which have had any kind of which could have helped in terms of any growth. And I think it's more the company's gone back to the drawing board to figure out its product portfolio, fill the gaps which are there, because they kept on building up a portfolio of very premium products which really didn't take off. Now it's a time where they could probably come back with something which is more meaningfully accepted by the market, which is closer to the entry level segment rather than premium, and that will probably help them start focusing their energies on that. So I don't think they've lost it as yet. Yes, it's been a setback, but it's something which they can recover very quickly from once your bread and butter business on all those SUVs, commercial applications and SUVs start taking off in the rural markets slowly.
Okay, all right, got that. Prakash Diwan, thanks a lot. Bharat, just one final word from your end. So it's a tale of two cities, right? The auto segment margins have halved, just 4% margins versus 8.8% same time last year. So auto segment is really under pressure. But on the flip side, tractors are doing well. They've held on, margins are stable. What do you do with the stock now?
So definitely, if you see, automotives have been a drag, but it has been for all the other players as well. Remember, Q4 has to be seen in the light that it was the last quarter of transition from BS4 to BS6 norms. So the wholesale volumes were definitely under a lot of pressure. If you see, the volumes have almost halved in this quarter for the automotive segment, purely because of the inventory correction. They have cleared all the BS4 inventory in this quarter. So definitely this quarter has to be seen in backdrop of that. And we definitely expect the automotive segment to bounce back. New launches, cost cutting by under the Ford JV, they will be launching products. Then they are cutting their exposure to SsangYong as well. Remember that SsangYong is a loss making, and they have clearly told that they will not infuse further capital in the loss making subsidiary. So that should be viewed as positive. Having said that, the rural side of the commentaries, if you see from the tractor players, from two-wheeler players, are definitely encouraging. So this is one of the few stocks that is a bright spot in the rural space, and definitely should recover from that. Also, I would lastly want to point out that the valuations, if we see for a large cap like M&M, it is trading at a close to book value, which is not there for any other stock. So there is valuation comfort in the stock. We have a buy rating, and it's one of the preferred picks in the space.
Okay, interesting take there. So there is valuation comfort despite the 75%